There is a moment no one advertises. You are alone in front of a screen with a single open tab, trading panel. There is a chart there, an asset you chose, an entry price you clicked, leverage you decided. The entire global market has access to that order flow. Anyone with a terminal or institutional algorithm could be trading against you right now. They don't know it, but they could. That is all you feel at the beginning. It is not certainty, it is a possibility you've never had before, and it feels exactly like fear. No one explained that this is how it starts. The videos don't show it, the courses skip it, but this is how it begins, with silence, waiting, and a voice inside you asking if this was a good idea. Level 1. You started with a video. It is always a video. Someone with a laptop on a terrace, city skyline behind them, telling you there is a way to make money from home without a boss or schedule. The mechanism is simple: find an asset, predict where the price goes, and the difference is yours. It sounds so reasonable you wonder why everyone isn't doing it. You open an account, deposit a few $100s, and now you have a trading desk. You wait for your first profitable trade, you check the chart, zero movement, you check again, a small loss. A week passes. The market did not instantly reward your arrival. Then, you discover strategy. You place a trade using an indicator you barely understand, risking $50. The price moves, you close it manually, and you make $10. Here lies the trap. You do not interpret this as random noise. You interpret it as proof of talent. You trade more, and on some attempt, a notification pops up: order filled, profit realized. The profit was $10, but the feeling is priceless, and that is the most dangerous thing that can happen to you now. What you felt is not success. It is an indication, and your brain doesn't know the difference yet. Level 2. Several months pass. You now know support and resistance, moving averages, and Fibonacci retracements. When someone mentions it in an online forum, you understand. That feels like belonging. Your setup has multiple screens and watch lists. It looks real. You spend hundreds on funding evaluations or small live accounts. Sometimes you win, sometimes you don't. When the month ends, you do the math: profits minus commissions and fees. Often, nothing is left. But you keep going because you are building something. That phrase becomes your shield. Every time someone asks how it's going, you respond with it. It is a convenient way of not answering the real question. You also become addicted to the activity itself. You change settings, launch another trade, optimize, and re-enter. Constant movement feels like progress, but it doesn't show up on your bank statement. You also discover your tolerance for ambiguity is lower than you thought. Not knowing if the month will close green or red affects you. You check charts at 11 p.m. as if they would change just because you are staring. They don't. You are physically present but mentally absent. Your head is always calculating a stop loss. Your friends notice it, but you interpret it as them not understanding your sacrifice. It is a comfortable narrative, but it is just a story you tell yourself to avoid asking if this path is right. Level 3. You reach this point with $20,000 in volume or funded accounts. The numbers now carry weight. It is no longer an experiment. And then, the market does what it always does when it is least convenient. A central bank decision drops out of line, or a flash crash wipes out your stop loss with massive slippage. Suddenly, you have a blown account and losses you cannot easily recover. It is a combination of events hitting you simultaneously. On screen, they are red numbers. In your body, they feel physical. No one explained that a bad trading week can strip away your sleep. In 2 days, what took months to build shakes to its core. Here, the real problem appears. Your identity is too tightly bound to your trading. When you win, you are a genius. When you lose, you feel like a failure as a person. This fusion is the central trap of Level 3. You put everything you are inside something unstable, and when it shakes, you cannot separate the analysis of your charts from the analysis of your soul. Every metric comes loaded with the question you dread: what if I am simply not cut out for this? Those who stay at this level avoid the question. Those who move forward look it straight in the eye and keep trading anyway. Level 4. There is no morning where you wake up feeling magically different, but on a random Tuesday, your decisions feel different, not faster, just different. You no longer look for the correct direction, you look for the smartest risk. That difference is massive. Your trading moves $70,000 a year in managed capital. There is consistent return, a solid risk model, and a system that works even when it's not perfect. You have years of historical data telling you which sessions are profitable and which assets have clean trends. That is not luck, it is accumulated statistical information. But being profitable does not feel the way you imagined. There are no fireworks. There is just work, cleaner, with better parameters, but work nonetheless. A part of you misses the old tension, the hunger, the feeling that your entire world depended on the very next candlestick. Stability feels incredibly strange. What does change irreversibly is your relationship with money. You no longer see it as a fixed amount you possess. You see it as an entity that moves, flows, and has velocity. When someone asks how much you made, the answer in your head is not a number, it is an equation of risk to reward. It is not easy to explain, so you stop trying. Level 5. There is an afternoon you will remember, not because of a big trade, but because of what didn't happen. You are taking a walk, having a meal, or enjoying a conversation, and your trades continue executing without you. Limits fill, stops trail, targets hit. The system runs entirely on its own, and you aren't checking your terminal. It sounds simple, but you reach this after years of a process that depended completely on your obsessive attention. Learning to let go of that control was painful. Now, you operate hundreds of thousands in capital. You have a small team, perhaps an assistant to handle your metrics, or a programmer who automated your edge. At first, delegating generated more anxiety than relief. Passing off parts of your system felt dangerous because the identity of your trading and your personal identity were still tangled. What also changes is what keeps you awake. Before it was a hit stop loss or a bad week, now you worry about systemic structure. How is this designed to survive a black swan event? What if your main liquidity provider changes terms? Those questions are more boring, but infinitely more important. The trader who thinks about adverse scenarios is the only one left standing when the market shifts. Your personal relationships have changed. Conversations with old friends feel like you are speaking from different floors of the same building. When they talk about job security, you understand, but you no longer speak the same language. It is not a tragedy, it is a consequence. Level 6. The language changes abruptly. The conversations you used to have in Discords are now with people who talk about legal structures, prop firm contracts, asset management, and private fund allocations. Your trading is an active financial asset with a verifiable track record and institutional scale. Someone could allocate millions to your strategy, and allocators are already asking. You operate at a scale exceeding $1 million in active leveraged capital. You have an accountant who builds tax strategies and a lawyer who constructs corporate structures to prevent disputes. You have a defined workflow and a portfolio distribution that doesn't depend on your daily screen time. Yet, the loneliness here is entirely different. It is not the loneliness of working late at home. It is the loneliness of not being able to talk with absolute raw frankness about what you face. The moment you do, the dynamics of any conversation change instantly. People calculate your net worth in their heads and make assumptions. You learn to measure what you say out of basic hygiene. Your conversations with people at this scale are careful, precise, and reserved. No one shows everything. There is professional respect, but you learned long ago that respect is not trust, and definitely not friendship. What you do have is a relationship with risk that very few people on Earth will ever develop. You do not fear it. You manage it like any other variable within a system you built from the ground up. You can remember that first notification with complete precision, the hour, the screen glow, what you thought, but you cannot access what you actually felt. You remember it as a historical fact, not as an experience. That distance is the most accurate description of what it truly cost to get here. There is someone who, at this very moment, is watching a video. A person with a laptop on a terrace, taking notes, looking for a broker, already planning their first trade. They have no idea what awaits them. They don't know their first account will blow up. They don't know the first year will cost far more than they calculated, in money, time, and conversations they will never have because they are too busy staring at a screen. They don't know there is a specific night in their second year where they will sit in front of a red terminal, watching their capital slide away, and ask if it is truly worth continuing. If you told them this, they wouldn't listen. Not because they are naive, but because some truths only become real when your body has lived them. Trading doesn't teach you strategies, it teaches you who you are when things do not go as planned. It teaches you how much pain you can take before you quit. It teaches you the difference between wanting a result and being willing to pay the absolute real price of achieving it. There is no training module for that. There is only time, decisions, and the version of yourself that appears in every single one of them.